Alrighty. Good evening, everybody. We will go ahead and get started here in about a minute or two. Giving latecomers a chance to get logged in. So, how's everybody doing tonight? One thing I always like asking people is, where's everybody calling in from or joining us from? Because we get people from all over the world coming into these webinars. It's a lot of fun. California Lee, Victor, New York City, UK William, Singapore Wendy, Toronto, New York, Wisconsin, Alabama, North Carolina, Fort Worth, Tucson, Oklahoma, Denver, Christchurch, Oxford, Denver, Colorado, Michigan, Florida, Louisiana, Taylor, Michigan. Good deal. Well, glad you guys are all here with us from all the different time zones. Tonight we're going to be talking about the fundamentals of price action and how price action can help increase, no matter what your trading strategy is, how price action can benefit your trading strategy and help you increase probabilities. So before we get started with the fun stuff, we got to go over the risk disclaimer really quick. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance making independent investment decisions. BasecampTrading.com is taking reasonable measures to ensure the accuracy of the information contained herein. However, BasecampTrading.com does not guarantee its accuracy and is not liable for any loss or damage that result directly or indirectly from such content from an inability to access such information or a delay in or failure of the transmission or the receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representation is being made that the account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then along those same lines, we are required to show you CFTC Rule 4.41. I'm not going to read through this one. Basically, it's a hypothetical disclaimer saying, look, if we're showing you examples from the past, which we are, because I can't show you examples from the future, obviously, that there's no guarantee that that same setup is going to play out the same way in the future. All right. If you want a copy of any of these, either one of these risk disclaimers, feel free to shoot us an email at support@basecamptrading.com. I'd be more than happy to get you a copy sent over pretty quickly. So with that being said, for those of you that don't know me, my name is Thomas Wood. This is me right here. This is my beautiful wife, Dora, and our dog, Merlin. How many of you in the trading room, if you've been in the trading room, hear him shaking his ears sometimes. One thing that I get a lot of times is, wow, Thomas, you're really young. Yeah, I'm pretty young, I guess. But I've been trading since I was about 13 or 14 years old. All right. And I've already spent more time and blessed to have spent more time already trading with real money than most people will in a lifetime. All right. I got started in this industry really young. My dad got me started with trading when I was really young. And one of the reasons I actually came over and started working with Basecamp Trading, which I'm actually a partner in Basecamp and the director of trading operations. But one of the reasons I came over here is because when my dad was learning how to trade, he had followed these quote unquote gurus out there. All right. And he lost thousands and thousands of dollars following these gurus that really didn't know what they were doing. And I just thought that that wasn't right. So I wanted to be the exception to the rule. And I wanted to actually make a difference in people's lives and be able to actually help them with their trading. And one of the things I say I like to do is pull back the Wall Street veil, so to speak, and take something that everybody thinks is super complicated and super secretive and that only Harvard graduates or Ivy Leagues can do anything with it, and actually say, look, it's easy. You can do it yourself. All right. So my first question for you, is, where are you currently at with your trading? Richard, I'm not sure why your screen's frozen. Try logging out and logging back in. But where are you at currently with your trading? You're in one of three categories. Number one, losing money. Number 2, breaking even. Number 3, making money. So where are you with your trading? Not consistent. Losing money. Number 2, breaking even. Making money. Breaking even. You see it now. Good deal. Breaking even. Losing money. Breaking even. Making money. Losing money. Losing money. Losing money. Losing money. Breaking even. Breaking even. Bob, Chris, Keith, Martin, Greg, Lonnie, Martin, Michael, Gabe, Jim, Richard, everybody saying, yeah, well, let me tell you a story about an individual that is now actually somebody I would consider a friend, and his name is Dave, okay? Now, Dave actually used to be a member, and still is a member, but he also works with us now. But when he first came to Basecamp Trading, it was about a year and a half ago or so, his equity curve used to be a 1 step forward and 2 steps back downward, steadily falling slope from upper left to lower right of the screen, which is the exact opposite of what you want. No, not Aquino, Mike. This is Dave G. But Aquino, same situation. And one of the things that Dave told me, and he said, I've studied trading more than anything else in my life. All right. I've never failed at anything I've set my mind to. I literally built a multi-million-dollar business from the ground up on credit cards. All right. But trading is really getting me because it seems like the harder I try, the worse I actually do. And that's something that a lot of traders feel, where they go, look, I put more and more effort into it, and it just seems I dig the hole deeper and deeper and deeper. How many of you are in a similar situation where you're going, you know what, I've always been successful, I've always been able to do what I want to set my mind to, but this trading thing is getting me. Yes, sir, that is me, absolutely. Yes, losing, that's me, yep. It's the opposite of every other model. Yeah, one of the things I always tell traders, yeah, lots of people can relate. One of the things I always tell traders is, so in other things in life, other areas of life, you can work harder, and that's all you got to do to get better results. All right, you want to, for example, you want to lose weight, work out harder, you'll get better results. You want to get stronger, work out harder, you'll get stronger. All right, but with trading, it's not necessarily just work harder, because if you're doing the wrong things, or you have a lack of discipline, or you don't have the correct rules to follow, you can smack your head against the wall as much as you want. It's not going to get you anywhere. Okay, and that's one thing that makes trading a little bit different than most other areas of your life. Now, that being said, I'm not saying that there's only one way to trade, because I just tell people there's hundreds of ways to trade the markets. But there's certain things that there is only 1 or 2 ways to do, and that's risk management and following your rules and discipline and patience. You have to have those qualities to become successful as a trader. All right. Now, how many of you have an equity curve? Look at your equity curve at the end of the day, or the end of the week, or the end of the month, or the end of the year, and it looks something like this. This is an equity curve that somebody named Sam sent me. And I'll show you what his equity curve looks like now, a little bit later in the webinar, but this is what it looked like. He said, I thought I was doing really good, and then the next thing you know, blow up the account. And he said, I've done that several times. He actually sent me 2 different equity curves showing that he had blown up an account 2 different times. Now, how many of you have an equity curve that looks like this? And then how does that make you feel? He said, it used to be before you met me. Good deal, Mike. Maybe you lost a large part of your retirement trying to trade the markets, or you had the market crash in 2007, 2008. You saw a huge portion of your savings and your retirement go away, and you said, you know what, I can do better than that. And how many of you have future plans that are relying on your success with being a trader? Okay, and if you don't get this right, you're not going to be able to do the things that you want to do. What is it costing you to not be a successful trader? Family time, emotional or financial stress? My question for you is, when does it get to the point where you're willing to take the next step and actually make a change? and try to change your trading future. Now, throughout this webinar, you're going to get a pretty good idea. You're going to learn something. I always teach people something. If they're going to spend time with me, I'm going to teach you something. All right. But at the end of this webinar, I'll be able to show you how, if you want to, you can take the next step and become a part of Basecamp Trading and move forward with that relationship and start changing your path. And some of you are going to go, yes, I'm ready. Let's do it. Some of you are going to say, no, it's not for me. And that's perfectly fine. All right. But our mission and my mission is to help traders change your long-term habits, your behavior patterns, and your future. All right. So let me tell you a little bit about why we're different. A lot of times you'll come in to a webinar. How many of you have been to other webinars where somebody's like, hey, come look at this indicator, or come look at this strategy. Look at how good I am. How many of you have been there? Oh, yeah. Lots of people. Yeah. Well, one thing that we see happening, and that our members were telling us, and the feedback we got from the thousands and thousands of people that we've worked with, is I'll go to this, they'll get this indicator, or I'll get this workshop, and they say, here you go. And they drop you off halfway up the mountain and say, good luck. And you're on your own, basically. Well, we understand that it's not just to go out and do it, but that becoming a successful trader is a journey. It takes time. It's not something you're going to learn in one workshop. Now, a workshop is going to help you. It's like doing an intensive in college, but nothing can replace the real world experience. All right. But we're all about helping you with that long-term guidance, because we're not here to tell you it's an overnight fix. Now, like I said before, at the end of the webinar, you're going to have a pretty good idea if what we're showing you is going to be a good fit for you. Now, the way that we do this is we call it the Summit Framework. All right. And we start you off in Basecamp. Basecamp has what we call the Acclimation Workshop, or the Acclimation course in it. And it's all about the basics. It's about the fundamentals. It's teaching you that, it's helping you build that strong foundation that every successful trader I know of has. Okay. It's teaching you how to put together a proper trading plan, how risk management works, how you use risk management in your trading. Teaches you about reward risk, teaches you how to keep a trade log, how to change your trading plan based on the trade log and analyzing that trade log. And then we move you on from acclimation into the next stage, which is the ascent. And in the ascent, that's where you start getting a lot of knowledge about different ways of trading. There's naked trading, there's trend trading, there's counter trend trading, there's breakout trading, there's momentum trading. All right, there's options trading, there's futures trading, there's Forex, all of the above. Okay, and we teach you about that, and you start going, okay, I like these ways of trading. These fit my personality, because every trader has their own personality. And then we move you on to Everest, and that's where you start going, okay, I have everything I want to know. I know how I want to trade. Let's put together a strategy that works for me, that fits me. And that's where we do mentorships or small group mentorships or market specific workshops where you're going to learn how to trade just a single market. All right. So what are you going to learn tonight? Enough of the ramp up. What are you guys going to learn tonight? Well, you're going to learn the definition of a trend. This is the first thing you're going to learn. One trader I worked with is a professional trader. It's what he does for a living. He's been doing it for 20 plus years. Okay. And he came in and he said, just learning the definition of a trend has added to the profitability of my strategy more than anything else out there. I'd never heard it explained this way. It makes total sense, and it's a game changer. So I'm going to teach you how to read the trend, how to understand which way the market's moving as a whole, no matter whether it's uptrend, downtrend, or consolidation reversal. We're also going to talk a little bit about the lack of need for indicators. I'm not here to tell you that indicators are bad. I use indicators myself, but everything I do is based on price action first. Look at the price chart, look where the market as a whole is moving, then we can start making adjustments. All right, and then we're also going to talk a little bit about trading price action trends, all right, and how you enter into a price action trend with a breakout strategy. Okay, so first things first, what is naked trading? Right, we call this naked trading. Naked trading is referring to trading based on price action alone. So we don't have to have 50 different indicators. It's what's the price chart actually telling us? Where's the market actually going? And understanding how to read the price movement itself. You do not need any indicators to see naked trading setups. All right, we're going back to the basics. And almost all the indicators out there are based on price action, so why not just learn how to read the price action yourself? That's what we do with naked trading. So the first thing we're going to talk about is, what is the definition of a trend? Now, the way I like to explain it to people is kind of like a math problem, where you have to have both sides of the equation to make the problem true. So let's say we're trying to find an uptrend, UT, uptrend. In order to get an uptrend, we have to have a higher high plus a higher low. Okay? Now, when I say a higher high and a higher low, what do I mean by that? Well, I'm talking about pivot points. So it'll look something like this. And we're always looking at the current price level compared to the last pivot. So in this case, we'd say this high is higher than that high. This low is higher than that low. Therefore, we have higher high plus higher low pivots, and we are in an uptrend. Make sense? Pretty simple, right? Now, the definition of a downtrend is the exact opposite. In order to get a downtrend, we have to have lower high plus lower low. All right, so it'll be moving the opposite direction. It'll be like this, stair stepping down. And this will apply no matter what market you're looking at, no matter what time frame you're looking at. Any market, any time frame, they all trend the same way. They never go straight. Well, I shouldn't say never. They very, very rarely go straight up or straight down, unless some news comes out, cause it to rip through the roof or fall through the floor. But normally you're going to be stair stepping, higher highs, higher lows, or lower highs, lower lows. Alrighty. Now the thing about this is you have to have both halves of the equation, here and here, in order to make a trend. So you have to have a higher high plus a higher low to make an uptrend, or a lower high and a lower low to make a downtrend. All right, if you get rid of one half of the equation, higher high does not equal uptrend. All right, so here's a little quiz for you. If this market is moving like this, we're putting in higher highs and higher lows. All right, and then all of a sudden, we do this. We put in a lower high. Does that make it a downtrend? Good deal. No. Why doesn't it make a downtrend? Because we do not have both halves of the equation yet. You only have a lower high. When does it change to a downtrend? As soon as this comes down here and breaks through the previous pivot low here, and we can now say without a shadow of a doubt that this is going to be a lower low, then we can say, all right, lower high plus lower low, now we're in a downtrend. All right? So the market's going to be in one of three stages. It's either going to be trending higher in an uptrend, trending lower in a downtrend, or it's going to be consolidation or reversal. Make sense? Hope you guys are paying attention because I'm going to quiz you. So let's take a look at what this looks like on a price chart. Now, I'm going to use a lot of different time frames and a lot of different markets just so you can see how it works, because like I said, it'll work on any market or time frame you're looking at. But bonds, 30-year bonds on a 500 tick chart is one of my favorite time frames and markets to trade because it trends really, really well intraday. Okay? So let's start on the left-hand side over here. Well, we'll start right here. We have a low down there, right? We're looking at pivots. Then we have a high. And then we have a low here, right? Then we have a high. So we have this low is higher than that low, and this high is higher than that high. So which way is the trend? You got it. It is in an uptrend. Now what happens? We come down, we put in an equally low low, we put in a higher high, and a higher low, and a higher high, and another equally low low, and a higher high, and a higher low, and a higher high, and a higher low, higher high, higher low, all the way up, higher highs, higher lows, all the way through this entire move. It never changed trend. Now what happens to the majority of retail traders out there? You see this little retracement happen, and you go, oh goodness, it's going against me. The trend is over, and you get out. And then it turns right around and goes right back your direction. But if you understand how a trend works, then you'll know that didn't change the trend. The trend is still up. Now, as of this point right here, as of that point right there, have we changed trend? Because now we have a lower high here. Man, you guys are sharp. No, we have not changed trend. Why? Because we haven't broken the previous pivot low. When do we change trend? Right down here, when we break to a lower low, we can say, okay, now we have a lower low and a lower high. In your bond example, you don't know that a given low is a higher low until the prior high is broken to the upside, correct? No, it does not have to break to a higher high to make a pivot, okay? So what we look for is basically about a 50% retracement. So if we go, let's use this for example, we have a high here and we start pulling back down to here, okay? So the retracement is right there. Once we get up 2/3, 66%, a little over 50% back up that way, then we can say, all right, now we have a pivot low. And now we say this is a new pivot low and we're looking for this to go higher. Does that make sense? We'll talk about entries here in just a minute. I want you guys to concentrate on understanding the definition of the trend first. Okay? So you're looking at pivots. Now, one thing I want you to pay attention to is I am not counting little blips like this as a pivot point. Okay? This is not a pivot. These are not pivots. We need to see the market have come down several price bars and then turn back around and start moving higher, or have retraced a pretty decent amount, whatever the average retracement is. Like that's the average retracement on the last one, and that means this one's far enough down that it's going to count as a pivot. All right, but we do not count just a little bounce or a 1 bar retracement. Okay, so keep that in mind. Let's take a look at another example. This is crude oil on a daily. Let's start on the left-hand side of the chart. We have a low, right? We have a high back here. And then this high is just a little bit higher than that high. So now we have a higher high. Does that mean it's an uptrend? No. When do we get into an uptrend? About that price bar there, when we can then go, all right, now we have a higher low as well. All right, so we go low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right, so why is this important? The reason this is important is because this is going to keep us on the right side of the market, where the market is moving overall, the overall trend direction that this market's moving, which means we're not taking shorts, we're looking for longs. We're looking for longs, okay? Now, when this comes back, and we come over here and we break through this pivot low, if I could draw a straight line, we break through this pivot low here. Does that change the trend? Yeah, Bill, I'll explain that to you here in just a minute. No, doesn't change the trend. Why? Because it's 1/2 of the equation. It's a lower low. When do we change the trend? About right there. Now we're in a downtrend. Why? Because now we have this lower low here, and we now have a lower pivot high. And then we go lower low, lower high, lower low, lower high, higher low, higher high. So we're in a downtrend all the way over until right here we go into an uptrend, and then you break back down, right back down to a downtrend again. Lower lows, lower highs. Now, one thing you need to do when a trend first changes, okay? When the trend first changes, the very first thing you're going to do is what we call a line in the sand. And the line in the sand is you're going to connect the last 2 pivots with a trend line. So for example, we were in a downtrend here. We go low, high, higher low, higher high. So we change trend. And we're going to draw our line in the sand there. All right, so our line in the sand is going to be a trend line that goes just like that. If you break through the line in the sand, we immediately resume the original trend. So when we break that right there, right back down to a downtrend. Make sense to everybody? And what this is what we call a micro trend. Okay? How do you know it's a lower high? Because a pivot. All you're looking for is for the market to have moved up and turned around and come back down. Now you have a pivot. Okay? So the very first step you're going to take after the trend changes is you're going to draw the line in the sand. That's going to be a trend line connecting the two pivot lows or the two pivot highs. If that's broken, then you immediately resume the trend. Now, when I say if that's broken, I mean it should be broken rather quickly, like it is here. If you go back and you look up here, when our trend first changed, you draw your line in the sand, and you see how long it takes for it to come and break this, how much time goes by. This is not a good breakout anymore. It should happen basically right away or fairly soon after the trend change. Okay? No, it is a pivot as long as the market has gone up, hit the price level, and turned back from it. Okay? Let's take a look at another example. This is Apple on a 500 tick. So start on the left-hand side of the chart again. Low, high, higher low, higher high, higher low, lower high, lower low. So we go uptrend, and then we change back to a downtrend. We go lower low, lower high, all the way down, and we stay in a downtrend. Now when we pop up here, and we break through this pivot high, right there, I've got arrows all over the place. So when we pop up here and we break through this pivot high, right there, does that change the trend? Seems redundant? No, it doesn't. You got it. Now, this is actually really important. You want to pay attention to what price action does when it breaks through highs and lows, okay? For example, we break through this high here. We immediately pull back down and close down below it. Every time this thing pops above that resistance, you did it on this bar, and on this bar, it immediately turns around and closes down or closes below it. What does that tell us? What's just looking at that price action? What is that telling us? It's telling us that the market's running stops and that there's an unwillingness for this market to rally. There's not enough buyers up here to cause this market to rally when we break through that resistance. Okay? So that's another additional thing pointing out that this should continue with the downtrend. Then lower high, lower low. Then bounce up and we go higher high, higher low, higher high, higher low, all the way up. Okay? So one last example before we move on into how you actually enter these trades. This is the Euro US dollar on a 5-minute price chart. So we have a high up here, and then we have a low here that's lower than this past low. So we have a lower low, and then we bounce up here. We put in a lower high. So when does the trend change? After we start to retrace from that lower high, so about this level here. Now we're in a downtrend. We go lower low, lower high, lower low, lower high, lower low. And again, we're not getting caught up on these little blips. They don't matter. Don't pay attention to the little ones. Pay attention to the big ones. We bounce up. We put in a higher high here. Now, here's what's interesting. Here's your resistance. What's this telling us again? You just learned it on the last chart. Watch for retracement. It's not ready to go yet. Pull back down, put in a higher pivot low, and we start to climb back up, and we close right up above that resistance, and then look what happens. Trend changes, higher highs, higher lows. And we start to rip. And at the very top, what do we have? Consolidation. We have lower highs, and we have higher lows. That's compression, that's consolidation. A lot of you will call that a squeeze. That's telling us to get ready for a breakout. Okay? So, how do we actually enter into this trade? Yeah, Bill, it would have formed a pennant. You got it. So how do we actually enter into this trade? I'm going to teach you two different ways of entering into trends here in just tonight. All right, so one way of entering into a trend is using what we call breakout logic, right? Where we watch for a break above the high or below the low of the previous N number of bars back, okay? Now you have to decide for yourself how many previous bars, highs or lows do you want to break. Normally I'm looking at something like a 2-bar breakout if I'm using a retracement strategy, okay? You've heard the saying before. How many of you have heard the saying, buy the dips? That's basically what we're trying to do with this, right? We enter after the retracement has started. So first thing we're going to do is identify the trend. Is it trending higher or trending lower? If it's consolidating, we don't want to mess with it. But if it's in an uptrend, we're going to say, okay, we have bullish bias. We'll look for a pullback, a retracement. And then after the retracement started, then we look to enter long as soon as it breaks the highest high at the last 2 price bars. All right? And our stop will go below the low of the last 2 price bars. Or of the dip. So what's that look like? Well, let's take a look at bonds. So remember, we had a low and a high and a higher low and a higher high. So as of this point, we're going in an uptrend. So when does the retracement start? So if we know as of this point, we're in an uptrend and we're looking for a retracement, retracement starts as soon as we start pulling back against the trend. So when these price bars start coming back down here, we then have a retracement. When do we get long? When we break the high of the past 2 price bars. Where does our stop go? Below the low. And then we're looking for the trend to continue. Higher high, higher low, higher high, higher low. All right, now you could have been entering here as well with your stop down there, or entering right over here with your stop down here. Now, one thing you want to keep in mind with trends, okay? One thing you want to keep in mind with trends is look at it like a graph. Let me plot this for you. So if here's our graph, and this is time, and this is probabilities, probability of continuation, okay? Probabilities of that trend continuing to trend. Continue to put in higher highs, higher lows, or continue to put in lower highs, lower lows. When the trend first starts, we're at about right here. As it starts to move, the probabilities of continuation increase, and then over time, they steadily decrease. And the longer a trend has moved, the further it has been trending. If you've been in a trend for a really long time and you have 25, 35, 45 higher lows, higher highs, the probabilities of that trend going into consolidation are much, much higher, okay? So when do we want to be getting into these trades? Not right at the start, but on maybe the second or third or fourth retracement. Fourth at the latest, when we have the highest probabilities of that trend continuing to push our direction. Does that make sense to people? Everybody understand? So if we look at this chart here, if this is where the trend starts, here's a second retracement. This will be number 2. This would be number 3. This one would be number 4. That's it. We don't want to be buying up here. And the reason we don't want to be buying up here is because the probabilities of continuing are decreasing by this point. And you run the risk of it doing something like this, where it pops up, gets you in, and then turns around and runs the opposite direction. Okay? Yes, Jim. All right, so let's take a look at another example. This is crude oil, remember? So remember, as of this point here, we're in an uptrend. So let's look at our retracement. Here's our retracement. Here's our first long entry. This is where you're long from. This is where your stop's at. This is where you're out. I want you to pay attention to this, okay? I'm not sitting here telling you this is going to work every single time, because it's not. It's trading. You're going to have losers. You have to accept that mentally. It's going to happen. What you have to do as a trader to be successful is you have to find a balance between reward risk, so how much you make on your winning trades versus how much you lose on your losing trades, and percentage win. how often you're correct on those trades. And you can have any kind of balance you want that equals profitability. So you could have a 20-to-1 reward risk ratio and a 20% successful trading strategy. So you're only winning 20% of your trades, but when you're right, you make 20 times what you lose on your losing trades. That's still a good strategy. You may have a 1.5-to-1 reward risk ratio with a 70% win ratio. That's a really good trading strategy. Or one of the guys I was in a mentorship with today, he has the best I've seen so far, and he had a 22.68 reward risk and a 71% win ratio. It was really, really good. I was really proud of him. But let's look at this. So here's our long, here's our out. Okay, when's the next entry? Right over here. As long as the trend is still intact, we still have another entry. Long, stop. And now you start to trend again. Okay, so now we have entry number 1, entry number 2, entry number 3 would be right over here. Stop below the low. All right, then we change trend. Now, when we pull back here and we break through this low, do we want to be buying this when it breaks the previous 2 bars high? So are we buying right there? Absolutely not. Why? The trend is no longer an uptrend. There is no trend. It's consolidating and reversing because we do not have higher highs, higher lows. Now we have lower lows and higher highs. All right. As of this point, our trend changes. So we start to look for the next retracement. Here's 1, sell there, stop above the high. Here's 2, sell there, stop above the high. Okay. Next one you get would be down here. 3, 4. You'd be looking at up here because this wasn't really a retracement. It's just a little bounce. Stop above the high. All right. Let's continue on. We'll take a look at a couple more examples, and then we'll talk about another entry method for trading trends. So first we identify the trend, higher lows, higher highs, start to bounce back up. We're going long here. That spells long, just trust me. Then here's our stop. And here's our continuation. Another retracement. Here's your long. It starts to bounce. It immediately turns around. Be careful. Get out of the trade. Now you put in a lower high and a lower low. So we shift to a downtrend. And we have a short here. The stop at the top. Here's our next retracement. Break the previous 2 bars. Sell here. Stop at the top. Next retracement is going to be right here. Stop above the high. This one would have gotten you out. Next one's here. Stop above the high. You get this run here. All right. You following what I'm talking about? But the number one thing you need to look at is what is the trend? What's the trend? That's why we talked about the trend definition first. Do you scale in or scale out of positions in uptrend retracements? You can pyramid on winning trades. You never pyramid on losing trades. I don't ever scale into a losing position. Don't add to losers. But you can add to winners by pyramiding. All right. So, like we talked about before, let's keep on going. Let's talk about the next entry. This is my favorite. This is my favorite type of entry into a trend. All right. This next one. Like we just discussed a few minutes ago, the first step we take after a trend changes is we draw that, what we call the line in the sand. Okay. If it breaks through that line in the sand, this is a breakout trade with directional bias based on the trend. If it breaks through the line of sand, then we're going to look for it to really run our direction right away, start to accelerate very quickly. If the line of sand is broken, then we say the market had a quote-unquote micro trend or a short-term counter trend move before accelerating the direction of the original trend. So what does that look like? Here's an example with Apple on a 30-minute price chart. Alrighty, so first step. What's the first thing we always do? Number 1, I taught it to you first for a reason. First thing we do is identify trend. Which way is the market as a whole moving? What's our directional bias? So we have a high here, a low here, a higher high, a higher low. We are in an uptrend. Now, what happens? We go lower high, lower low. What's the first step we do when we put in a lower high within the context of an uptrend or a higher low within the context of a downtrend? First thing we're going to do is we're going to draw our line in the sand. Well, if I could draw correctly. If we break through that line in the sand, we have a long entry. And our stop goes below the previous bar's low. And we look for this to accelerate very quickly in our direction. Now, with this trade, although we're using trend as directional bias, we're not necessarily trying to stay in the trend for the entirety of the trend. Does that make sense? So what does that mean? That means normally we're going for one of a couple targets. We're either going for a 2-to-1 reward risk ratio, we're looking for it to test next support or resistance, or we're doing a trailing stop. How do we do the trailing stop? Well, in a breakout trade like this where we're expecting rapid acceleration, we can use that same breakout logic we use to enter trades on retracements. So we'll use a 2-bar trailing stop. So that means if we're long here, we'd be trailing here, trailing up here, and we'd be out right over here. Right? Then let's continue on with the trend. We still have higher highs, higher lows, right? And then look what happens here. We go high, low, lower high. Okay? First step we take, draw that line in the sand, breaks the line of sand. Here's our long. Stop below the low. Here's our rapid acceleration higher. Trailed stop. Or 2-bar trailing stop. It doesn't break 2 bars lows until right over here, and then you're out. Make sense? Take a look at another example. This is the cable, British pound US dollar currency pair. This is on a daily price chart. Which way is the trend moving? Trend is moving lower overall. Lower highs, lower lows. We go low, high, higher low. So this first one here, we're going to draw a trend line there. Here's our sell. Here's our stop. Our trailed stop exit is going to be right over here. Didn't get a big move. So once we trigger a break of the trend line, once we trigger that line in the sand, what is the first test that we need to watch for to see if this market's going to have the strength to continue to run? The very first thing we want to watch for is, are we going to break through the previous pivot low? So in this case, it would be down here. Well, around there. And what happened? We came right down to it just about and bounced off of it. All right? So that's the very first test is, are we going to break that pivot low? So then what happens? We bounce back up, another higher low within the context of an overall downward trending market. Draw our trend line. Here's our sell. Stop above previous bar's high. Here's our run. 2-bar trailing stop has you out here. Plus, now that we have this big pivot down here and this big pivot here, we can draw this secondary trend line going across the lows, the white one. So when it comes down here, we're covering on top of that trend line in case it doesn't break, because for a few days there, a week and a half or so, it didn't break. It looked like it was holding. So we cover on top of the trend line. Re-entry is when we break. Treated the exact same way. Stop above previous bar's high. Rapid acceleration lower. Exiting after we break the previous pivot high. Now, the bigger the pivots, the more significant the pivot points that we're looking at. So if they're available, if they show up on a weekly chart, for example, there's a micro trend on a weekly, there's a much higher probability of this type of move. Or for example, if you're day trading, if they show up on a 240-minute chart, a 4-hour chart, then there's a much higher probability of having that big rip right away. All right, the minor pivots, like these ones up here, probabilities of having that big running market, not quite as high. They're still good entries. They're still nice little trades, but the probabilities of having it just tank, not nearly what they are if you have 2 significant pivots. All right, then the same thing happens over here. Sell on the break, stop above previous bar's high, run down, you're out when it bounces above the in number of bars highs. All right, let's take a look at another example. Crude oil, yet again, I love this chart because we killed this in the trading room when this happened. Plus, This whole breakdown that everybody was like, I can't believe crude oil's fallen $50 a barrel. Go look at your weekly price charts. Take what you just learned tonight. Go look at a weekly continuous contract of crude oil, or even a monthly, and then tell me you're surprised that it happened. Because there was a textbook consolidation within the context of an overall downward moving market. It took 4 or 5 years for it to do it because it was on a monthly price chart. But when it broke, you just tanked. Doesn't happen all that often, but when it does, you got to take advantage of it. All right, so here's our micro trend. Here's resumption of the downtrend. Here's our micro trend. Here's resumption of the downtrend. Here's your micro trend. Here's resumption of the downtrend. See what I'm talking about? Now, let me tell you a little bit about what our members are saying. These are just some of the comments our members have given us regarding being a part of Basecamp Trading. Like I said, I was going to tell you how you can take the next step. For those of you that feel like you've learned something, and you go, you know what, this looks great, this makes sense, this is logical to me, it makes sense to me, and I want to trade this way. This is how you take the next step and come on board with Basecamp Trading, okay? Some of our members are saying there is no gray area. It's either there is a setup or there is not a setup. A very straightforward approach to trading and makes it simple. Dave G. I've been in a lot of different rooms on a lot of different sites over the last 4 years. This is the first one that I've stayed because of understanding not just what is being done here, but also the way things are presented. Thomas, the information and knowledge you give in this room is the best in the business, and this is coming from someone who has subscribed and attended over 100 trading rooms. Just curious, how many of you have learned something tonight? How many of you are going to leave here and go, you know what, that made sense. That helped and I understood it. Good deal. Excellent. That's my goal. Like I said, if you're coming to spend time with me, I'm going to try to teach you something. I want to impart knowledge and help you do better, whether you're going to be joining us or not, right? Because like I said before, my goal is to make a difference in as many people's lives as I can. All right, so what are you going to learn in the Naked Trading Workshop? Because this is just a webinar. We only had an hour here tonight. This was just kind of help you learn as much as you can in an hour. But in the workshop, you learn a whole lot more. You learn more about price action trends. You know when a market's in consolidation and how to avoid chop. How many of you get into trades and get chopped up? You get in only to have it turn right back around, knock you out, and then later in the day, start moving the way you thought it was going to go. But your timing was off. We're going to talk about how you avoid that. We're going to talk about timing entries on retracements using candlestick patterns. We're going to talk about trading the second break. What are the expectations on the second break? We'll talk about trading reversal patterns for market tops and bottoms. Channel breakouts. Will the market break higher or lower? High, low, and low, high reversals. Identifying when the market is doing a head fake. All right. You're also going to get Naked Trading Part 2. We're going to talk about how to move forward toward being consistently profitable, smoothing out that equity curve from lower left to upper right. Mastering trading psychology, the fundamentals of candlestick trading for timing entries. What candlestick reversals have the highest probability of success? Using simple indicators as filters for candlestick setups. So we don't want to go, one of the biggest problems I see happening is traders, they go and they buy 500 indicators and they try putting all of them on their chart at once. You can't even see the price action. Okay. But I want to teach you how you can take just a couple of tools and say, we're going to use these to confirm this setup. Talk about how to use momentum filters to increase probabilities and how to increase success, but still have actionable signals. So how do you get these workshops? Well, you're going to get Naked Trading Part 1. You're going to get Naked Trading Part 2. But remember how I told you, we don't want to just drop you off on the side of the mountain and say, good luck. Now that you have the workshop, go do your thing. It's all about that long-term relationship and that long-term commitment. And that's what we are trying to achieve here. Okay. So we're also going to give you a free month of the trading room of a platinum membership. So you can be asking questions throughout the day. So you can come join the trading rooms, see how it operates, reading the right-hand side of the chart as markets are actually moving. Remember how I told you as well that we start you off in Basecamp? We're also going to give you the acclimation workshop. Okay. That's one that teaches you all those fundamentals. So before you start doing anything, you got to learn the fundamentals. How do you have risk management? How do you get your mind right? Get the psychology right to be trading? How do you put together a good reward risk profile? All that stuff. Normally we would charge around $850 for this. Okay. Tonight only, for the next 24 hours, we're making all this available for $147. And I tell you what, I had to fight tooth and nail to get this price. They did not want to do this. But I told him, I said, look, this is going to be the most helpful thing we can do. So all you got to do to get it, go to bctnow.com/Feb. Okay. bctnow.com/Feb. That's going to get you all that. The price is available for the next 24 hours. If you need help, feel free to shoot us an email, support@basecamptrading.com, or you can give us a call. We have people standing by on the phones to help you out on the phone, 801-889-2699. All right. No, you can still use your platform. Absolutely. Okay, so let me tell you, remember I told you I'd show you the equity curves of some people. This is Dave Glissmeyer. He's actually going to be, he'll be the one that's answering the phone. This is his equity curve now. And it looks even better than this. This was from back in July of last year. He's doing even better now. He's increased the number of contracts he's trading. And by the way, these are live trades. Okay? This isn't paper money or anything. These are real traders with real money making real differences in their futures based on what they've learned. All right? This is some more testimonials, things that people have said. Thanks, Thomas, for Naked Trading Workshops. Bought part 2 yesterday. Used it on bonds today to make 31 ticks with 2 contracts. Nice trade, James. Naked Trading Mentorship is the best class I have ever taken in a 2-week period. I would highly recommend it to anyone that is serious about learning how price action moves and how to enter and exit. Thank you for all you do and all your help. That's from Tom. Used to get caught up in the junk between support and resistance, and I would obviously get chopped up like hamburger. How many of you said you could relate to that? It wasn't until I found you in your room that I've learned to let the market show me and be ready. Thank you, Gary. Oh, remember I was telling you about Sam, too. Remember I showed you his equity curves where he blown up the account? These are 2 of his different accounts. This is a Forex account up here. This is his new equity curve. Forex, this is futures. All right, and when Sam sent me these, he said, by understanding how to trade price action without anything, that was the key to trading. The results, knock on wood, are almost perfection. I attached my 2 previous blown out accounts, equity charts, plus the progress of last week and this week. I am so happy that I've accomplished so far, and yet more to come. I'm gaining back my faith and strengthening my confidence towards a brighter future soon. So thank you, Mr. Thomas Wood, for being my path to enlightenment. Find kind of funny. But yeah, he's getting really good returns. And it's not just Dave and Sam. This is Lori's equity curve. All right. And honestly, she has one of the best equity curves I've seen. It's excellent. And she's gone through the trading framework. She's gone through the summit framework. She's gone through mentorships. And she took the time to learn how to trade. For example, Dave up here. Dave didn't just instantly come in and take a workshop and now, boom, he's making money. It took him, if you ask him, it took him a good 6-8 months. And he did workshops and mentorships and studied and studied and studied. And I always tell people, when you first come in, trade simulated, okay? Trade simulated, because there's a learning curve. It's going to take time to learn how to do everything. You're learning something new. Don't expect to get instant results. It doesn't work that way. Also, don't come into the trading room expecting me to just say, go long here, go short here. It doesn't work like that. The trading room is to teach you how to identify the setups yourself. So I'll call out a lot of different setups throughout the day that I'm not necessarily taking, but so you can learn to read it on the right-hand side of the chart. Okay, so I'll show you. This is what it looks like on the right-hand side of the chart. No, this isn't a good trade. It's not one we want to get into, but this is what it looks like when it's developing. Okay, you got to go to bctnow.com/Feb to get everything signed up. All you got to do, it'll bring you to this page. Put in your information. Make sure you put in your correct email address and phone number. That's how we get you the workshops you're paying for and get you your login information to get into the trading rooms and stuff. It's 147. Put in your credit card information. Complete my purchase. I'll be emailed to you. Okay. Yeah, I've worked with thousands and thousands of people. Okay, ranging from literally multi-billion-dollar funds, helping them with some technical analysis, all the way down to retail traders and people trading $5,000, $6,000, $7,000 accounts. Okay. Does it have guidance on how to manage single contract trades versus multi-contract trades? If I remember correctly, Jim, I believe it does. But if it doesn't, come into the trading room and ask me, and I'll explain it to you. Okay. How long does Basecamp trading take? So how long does it take you to go from nothing to knowing how to trade and making money? It varies. It depends on each person. For example, Sam, he went through a 2-week mentorship and 2 workshops, and then he was good. Dave took 6-8 months. Lori took 3 or 4 or 5 months. Some traders, it takes a year. Some traders, it takes a couple of months. It really depends on how much time and effort you put into it and how fast you are in picking up the stuff. Can you wait before using your 1 month of trading room? No luck. It's all combined because of this deal that we're doing over the next 24 hours. So it'll start as soon as you sign up for it. When do you add to winners? I'm thinking when you have your margin covered of your first entry. It depends on where your initial entry was within the context of the trend and how good the additional setup is to pyramid on. In your trading room, do you trade without indicators? Well, I have to buy more indicators. Okay, that's a good question. No, I don't trade without indicators. I use indicators. Like I said before, indicators are not bad. In fact, Naked Trading Part 2 is going to teach you how to use certain indicators like MACD or MQ momentum to increase probabilities. So I do use indicators every day. No, you do not have to buy them in order to benefit. Do you get yes, SP, I believe so. So just shoot an email with support. Are workshops recorded so we can watch them on our own schedule? Yeah, Christopher, these are all on demand, so you can watch them whenever you want, and as long as you stay a member, you'll have access to them. What do you think about the companies? Ed, I don't know. I've never done that. I've been a part of hedge funds, but that's completely different. So, yeah, I've never done one of those, so I couldn't tell you. Did the now successful traders have substantial prior trading experience? Depends on what you call substantial. There's some that have been trading for a couple of weeks. Some that have been trading for, like I said, there's people in the trading room that are literally, there's people in the trading room managing millions and millions of dollars. So, yes and no. The 147 is for the trading room for 1 month, 30 days. That's a good question. Yeah, it'll auto renew. If you want to stay a member, it'll auto renew at 147. If you do not want to stay a member, all you got to do is shoot us an email and say, hey, I'd like to cancel my membership. And then I'll say, okay, no problem. Yeah, John, it'll extend it. So shoot us an email, let Min know, and he'll take care of that for you. Yes, the indicators are from Part 2 are available on most platforms. No, membership is only $147 a month. Seems like trendline breaks happen more like number 3 or number 4 of the entering trend technique. So you mean on the 3rd or the 4th retracement? Yeah, David. Normally the micro trends are going to happen towards the end of the trend, or as the trend has become more mature. So it's been around for a while because you're looking for the market to actually consolidate to give you that new entry. What's the best market to break in with? Depends. Are you trading futures, Forex, equities, options? Bill, they were losing traders, so does it really? I mean, does it matter? They knew the fundamentals. The question was, for example, Dave and Lori and Sam, how long had they been trading before they came to Basecamp? I don't know. I don't know how long they've been trading. I do know that they were not making money. They knew the basics, knew what long short was. They knew what stop losses were. They knew what a price chart was, all that. No, Mike, that's good. How much time during the day? The trading rooms are open from the futures trading room. The one that I run is futures trading room. That's open from 8 a.m. until 12 noon Eastern every day. And make sure you are in there right at 8 a.m. because, for example, today we had 2 different trades, a short in crude oil and a long in bonds, within 30 minutes of the trading room opening. So make sure you're in there. And that happens all the time. The options room is open from 9 a.m. till 1 p.m. Eastern. Yep, just answer that. Would you recommend these methods for stocks as well? I believe you mostly use this on futures. Yeah, Brandon, absolutely. So remember how I told you there's a guy I was meeting with today who's got a 22 point whatever reward risk and a 71% win ratio? He's trading equities only, just long short equities. He's not trading options, not trading futures, just buying and selling shares of companies using these techniques. Are there any indicators included with naked trading? Nope. Naked trading is about not using indicators. I'm just kidding. Yeah. What does Platinum membership include? That's a great question. Platinum membership gives you access to both trading rooms, gives you access to end-of-day swing trading videos, gets you access to members-only webinars where we'll go teach you different topics that we don't teach to the public. Get you access to the weekly outlooks. One of the big things that it does is it gets you into the Slack chat room so you can be talking to the other members that are in Slack throughout the day. 24 hours a day, we got people in there talking basically. And seeing what trades they're putting on, trades they're taking off, how they're doing, what their experiences are, all that good stuff. Thomas, I'm new to BCT, Basecamp Trading. What's the difference between Platinum and Elite? Oh, SP, shoot us an email. We'll explain it to you in email. Not sure what you mean, Wendy. Send me an email. Yeah, feel free to, you can email me directly. It takes me, so if you email support, normally you'll get a response within a day or two. You email me, it might take 3, 4, 5 days. My email address is twood@microquant.com. I respond to all my emails myself. I don't want to hire an assistant because a lot of times there's people asking about trades and stuff, so I don't want to have to try to get somebody else to think like me, basically. But yeah, you can email me directly. It's very impressive that Dave and Laura went from losing to winning. Wow. Yeah, there's tons of people that have gone from losing to winning, Bill. Come to Slack and just ask them. What are the mentorship costs? They all depend. It depends. They vary. They vary widely. If you're already... Yeah, Harry, we'll add a month on there for you. Just shoot us an email. Is there a live virtual trading room? I'm not sure what you mean. I trade futures. I'm in. Will I be able to access this recording? Yeah, Al, we're going to try to get this recording out to everybody. Nope, John, same thing. My email address? Yeah, Wendy, here you go. Yeah, in the trading room, you can see my charts live. You said Min is great on support. Good deal, Chris. Yeah. Again, the link is bctnow.com/Feb. Again, www.bctnow.com/Feb. That's going to get you Naked Trading Part 1, Naked Trading Part 2, an entire month of Platinum membership, and the Acclimation Workshop. That is a ton of stuff. And it's only $147. I mean, that's dinner and a movie. Especially with how much movies cost nowadays. It's crazy. Shoot us an email at support@basecamptrading.com if you need help. Or you can give us a call, 801-889-2699. Trading room is not open at night. Again, trading room hours, futures is open from 8 a.m. till noon Eastern. And the options is from 8 a.m. or from 9 a.m. till 1 p.m. Eastern. Dennis, you'll shoot an email support. You'll have to log into your account at Basecamp Trading, and it'll be under Acclimation tab, I believe. All right, everybody. That is it for tonight, though. I hope you enjoyed it. Thank you all for taking time out of your night to spend with me. I appreciate it. It was a lot of fun for me. I always enjoy teaching other people this type of thing. So thank you all. Yeah, Chris, shoot us an email. Shoot me an email, and I'll take care of it. But you can go ahead and get signed up, and then send me an email, and yeah, we'll fix it from there. So I'll see you all, or many of you, in the trading room bright and early tomorrow morning. Have a great day trading. Have a great rest of your week. And until next time, happy trading.